Good morning, everyone. Really early in the morning for me, actually. It's like, and I'm doing this the second time now because I just screwed up the video. So I started at like 4:20 something, and now it's 4:49 in the morning here. But I promised the video yesterday, my last post, which I want to come to in a second. But I want to focus on all the different time frames once again. And yeah, some stuff has been developing that I've been talking about for the past week and a half or 2 weeks now. And yeah, I just want to talk about it. So, first thing we want to look at here is the 4 hourly chart. So, if I just make that a little bigger here, we can see that's something I talked about before is the EMA ribbon that we are seeing a full flip in it, a bullish flip here, where the smaller EMA bands are now above the larger ones again, the EMA 20 being on top here on the 4 hourly. And the last time we had that was actually late in December. By the way, if I screw up here, cut me some slack because it's really early in the morning and I've slept about 3 hours. So let's get it. I actually quit drinking coffee as well, which doesn't help the cause right now. But hey, yeah, so what I wanted to point out here is that the last time we actually got that full flip in the MA ribbon was late in December here. You see, last time was December 27th, December 28th. And then actually we went all the way down. So if we would look then at the bigger picture later, I'll show you on the 1 day chart. What I mean is that we have something very similar here where we went all the way down and then actually came back to the top of the neckline here and we're above 50K again after we were all the way down here December 4. If you remember that dip where we went almost down to 40K and then even went further down. So obviously this could here look very similar. As you see here, the dip, the low point, and obviously it's been developing way more bullish here, that we were moving in an ascending channel all the way up. So from that perspective, it looks way better, but we still need the confirmation to get back above the neckline and actually build support there, which here you can see we didn't do. We then dipped further down. Here you can see that. I just pull here the neckline, right? As soon as we reached it, here we go rejected, here we go rejected, and then we went further down. So we need to get here, represented by the top of the local Fibonacci retracement. We need to get above that neckline and build support here. And you can see it here, that lays right around 43.5K. So that's the first step for us to really move into bullish territory. Then what else can we see here? Nothing really, nothing changed. I mean, I've talked about this a lot. So if you want to know more about this specific time frame, just go into my profile, last video, last post, previous post before that. There's a lot of similarities, but yeah, just so you know, this ascending channel obviously has been forming, has been taking different shapes along the way, but now we have the full form of it with these different touch points here, and we broke out of the top and now obviously are still here forming a dangerous candle right now. We'll have to see what that develops here. Could obviously go into a pattern where we then have a evening star kind of setup where we then dwindle back down, but we'll see. We'll see. Um, Only 7 minutes left in that candle as well. Well, we got to see it. First step here, obviously building support now here above 41K. As you see, strong support level, resistance level where you got rejected previously, Fibonacci retracement level, strong level here, need to build support, very important. Yes, so let's move over to the daily. Here, obviously, this I wanted to apologize for. First thing, I drew the Fibonacci retracement wrong when I posted this, but I already posted it correctly. I hope. I was so tired when I did it just now at like 3 a.m. or 3:30 when I posted that. And yeah, but here it's correctly. And I just wanted to go through a few things here that have been developing. What is bullish and what is still in front of us? So bullish, obviously, we broke out of the falling wedge here, which is obviously a pattern with a bullish bias. We broke out of it. Here's something which I talked about here: potential double bottom in 33K area, which would have meant that we went back all the way down and then bounced out of it. We touched that area. In theory, we always touched the area where we bounced from multiple times, which I want to point out here in September as well. So we're not out of the woods in that perspective yet, but we did touch it, and we don't have to touch it again. It's not necessary. But here, yeah. So the bullish things, we broke into the EMA ribbon last time we spoke about, where we got rejected on the 4-hourly time frame, clearly in the 39K area multiple times. Here it was represented on the daily chart by the EMA ribbon. And we now broke that resistance here clearly to see as well. We broke above the exact conjunction point here with the 0236 level on the Fibonacci retracement, and then the obviously the resistance and trend line here since the November all-time high here of the falling wedge. Yeah, that area, obviously, here I call it the local resistance area, has been broken into and broken above. Now what's standing in front of us here, obviously we have the next Fibonacci retracement level. We still need to get a flip again in the EMA ribbon, as we saw every time we were rallying. We had a flip in the EMA ribbon here, bounced, never fell into it. Every time we fell into it, we had a bit of a bear trend going on. So we want to flip that again and then get on top of it, and at best a bounce back up on top of it, right? Like we did here and like we did here, and so on. So that's something that's standing in front of us. Then above us, still the bull market support band, the 200-day SMA. Obviously, we still need to get above, as we did here and here as well. And here actually we bounced right off it. So that's here we looked obviously way more bullish in this regard back in September than this way around. Also, even though here we fell below the EMA ribbon, which is obviously shorter moving averages than the 200 and the bull market support band. So we bounced off it and then came above it. So in that perspective, we look more bearish this time around, also from other patterns on the weekly, and that I'll show in a second. So that's still all in front of us to look really bullish. And then obviously to get back above is then here, for me, a simplified explanation of what being bullish is, that we are above the bull market support band. And then we still here have the golden pocket on the Fibonacci retracement. And yeah, then we would be in full-on bull territory here. And then altcoins, of course, would be absolutely going through the roof as well and everything. So that would be the the happy place. These scenarios obviously still in play then. If we get rejected here anywhere in this area here, also obviously now through the 20 hours left in this candle just open, obviously, but here we need to see how this forms now throughout the weekend, Saturday and Sunday, and then how Monday the markets open again will have a lot of influence in what's going on here on the slightly larger time frame on the daily. So then let's move over to the weekly. And here's something I wanted to point out. Go back all the way here. If you go back to my first post, I've been talking about this pattern here, the head and shoulder pattern, since early December, right? Almost 2 months ago. And here you can see it clearly. Been talking about it all along. Here we see even those trend lines, December 16th, right? Those are the trend lines I want to talk about now. If we press play here, we see how important they are, because I pulled them from where we had the candle that broke the previous all-time high from 2017, and then we had they have been actually only built here in July, and then I spoke about how we will find out how they actually will behave when we test them again, and now we see how they actually came into play. And that was back then where I still was talking about my optimal bottom for Bitcoin being 37.5K. Yeah, obviously then I started talking about the 29K to 30K, 1K region early in January, once we started approaching that area, which came from here then, of course. But yeah, you can see that, just wanted to point that out quickly. You can see that in my profile, also what I just spoke about the last bit, where I started talking about, I think January 4th or 5th, about this area here, the 29K to 31K area as a bottom potential. So what I want to say here is about those trend lines, right? Here you can see them, they're still the exact same ones. We dipped below it and opened below it and just got rejected on it, right? Closed right below it and now actually broke above it. and then this box here that you could also see on those same charts, which I drew from the tops of the shoulders, right here from the candles and the bodies and the wicks of the shoulders, where we got rejected when this first pattern took a bullish turn, but looked very similar. That's why all the similarities made me look at this pattern over and over again, because there's so many guidance points that we could take from it that looked similar here. So why not look at something that happened before and see how we match up with it if there's a lot of similarities. And that way you can also see if we're turning more bearish than last time around or more bullish than last time around. And here this way we could spot very quickly. I already spoke about it. Here you can see over a month ago that when I started looking at this area here, that this time we look way more bearish around, because here we only dipped below the EMA ribbon, shot back up above it. Here we actually closed below it and then went further down. So that's why then this area here came into play. This time around at the exact point here where we then would have bounced already. As you can see, we made the shoulder here. When we take the bottom of this pattern, for example, here, no, we completed the left shoulder here, we completed the head here, and then when we completed the shoulder here, we bounced, had a bullish reversal. Since this is a bearish pattern, normally we should have gone at least back down to where we started this, or from somewhere down here in the 19 to 20k region where then these trend lines came from. Here it looks like more we are on track to do this, right? We fell below the bottom line of this pattern right here, and that's why it looked more like we're going at least to this area down here. But for now, like I spoke about last week, it could be that the 33k area is already a bottom. I spoke about it in my last post and in the video, but I looked at it more as a double bottom. As you saw here, we visited the area that we bounced from eventually 3 times. Here we haven't yet. The lowest point we haven't touched. We haven't got multiple touch points in the same spot or area yet. And this candle here, obviously closing tomorrow, is unlikely to be the one to get back down here, where we could see something here that similar to, for example, this setup off the shoulder here, where we then now have something that goes back down again and then find the bounce. So here, obviously, then we have the resistance point of the body trend line, the EMA ribbon, and all the other bull market support band, the 200-day SMA. You can clearly see that all here as well. I can even pull that up here. You see that that's right above us still. All that's all resistance. So to get bullish here, also, as mentioned just now, we have to resistance that we saw on the other time frames as well, the 41k. Here, if I just go back, sorry, the 41k is exactly where we're sitting now, where we want to build support right now. So this is where we are being rejected right now. So ideally, to make it more clear that we're bullish, we want to do it on larger and larger time frames, right? On smaller it starts, and then we want to have correlation on all the time frames to get a confirmation of a trend. So here we obviously still have a lot of things that we need to break above to make it look more bullish. But as for now, this is already a very strong reversal here. But as you see here, we had something very similar, and then even went further down, all the way down to this area. So I'm not completely convinced yet. And as I spoke about the 44k region, that represents the neckline, the 43.5k region. Here you see it. Here it's clearly to see on the weekly, represented here by the EMA ribbon and the trend line from the bodies. Sorry, by the way, guys, I'm really tired if I'm like a bit slow or forgetting things. So yeah, that's just what I needed to mention this one again, since this is the one I've been talking about for 2 months, and it's still showing us where we are at in the market, right? That this time around we're way more bearish than right here back in summer. Now the last one. This is obviously a pattern. We could just look at this, because here everything that I just spoke about shows up, and that's just something I wanted to mention again, how important that is. We obviously could just look at one chart, but everything in this chart has to make sense on the other charts as well. Now I will show you how we have perfect alignment on the 4 hourly, daily, and weekly here to get full confidence now on the monthly. A monthly is obviously, if a 4 hourly shows us something, it doesn't give us as much confidence as something that's been developing over the period of many months. I mean, here we're looking literally at years of development. This is a year just for us to get here. From here on, it's almost, if we get to the lowest point, this is almost 2 years that it took us to get here, right? So this obviously, if this breaks, if this trend breaks, it's obviously way more bearish than anything else, or bullish if it breaks to the top, right? So this gives us, I'm just sliding down the chair here. That's how tired I am. It's crazy how early it is, but what Bitcoin does to us. But I just felt like I had to post this video. Um, yeah, so here we can clearly see what I mean now. So if we look at the Fibonacci retracement, that's the exact spot of the neckline currently of the dip on the 4 hourly, right around 43, 44K here in the Fibonacci retracement. Then the support below us here, the 36K. If we look at the candle, um, we can see that we can still go to the bottom of the channel and maintain this perfect parallel ascending channel, which I spoke about last time. We have perfect parallel tops here. We have 4K between the tops here and 4K between the bottoms here. So we can obviously still go down to that double bottom like we did here. So as you see, we don't need to go exactly as low as here. We could just touch the channel here and then bounce, but then we would be exactly in that 33K double bottom area as well. So that shows up here as well. And then here, obviously we need to get through the 0786 of the Fibonacci retracement still, and then the top of the channel. And then if we would get here, obviously we would have a point where we would see if we go to new all-time highs, or we stay in this channel and move back down here again and come back to the 30s. We would have to see that, or it could be in the 40s by then, right? If we move all the way back up and get then some here, then the low point could be somewhere in the 40s by then. But for now, we got a nice bounce here in the area, and it's looking way more bullish than a week ago. But what I want to show you is that on this pattern, just all matches up, right? We have all the same areas here, the 29K to 33K area here that we saw earlier. 33K would be if we get the double bottom bounce, 29K is if we go to the previous low point area, if we wick out of the channel and get to it. That shows up on the different charts. And yeah, it's just important to get correlation on all the different time frames, and wanted to point that out once again so you get full confidence with your ideas and charting in general. Yeah, that's it for me now. And obviously, you got to keep an eye on the traditional markets, the U.S. stock markets, the European stock markets as well. Now there's been some talks about hawkishness, and as far as the rates go, and obviously the whole Russia situation with increasing potential increasing prices or complete sanctions kicking in. So yeah, got to keep an eye on a lot of things. And thanks for watching. Thanks for watching the most tired version of myself that you probably ever see. I'll head straight back to sleep now. And in the meantime, would be cool if you leave me a like or comment. Tell me what you like, don't like, or just hit that thumb button and give me a little help in getting the word out. The more an idea gets liked and commented on, obviously I'm sure it helps the algorithm, and it just makes it stand out in the community forum or whatever you want to call it. All right, guys, I'm back to bed. Take care. See you soon.